looking at the IPO and the changing expectations around what was achieved, just kind of dealing with the IPO issue first of all, is this confirmation that you're not a tech company, you're a financial company?
I think it's the contrary here. If we look at where we're coming out, I think about $36 billion market cap. This really confirms that we're doing something special and different, and really think of ourselves as a tech platform. I'll give you an example. Earlier this year, 15 billion closed in January, up to 30 billion closed here this month. So the growth, the scale of our platform, I think, is unrivaled. And part of our discussion was, let's make sure we have the right investors on board. As you know, and as I'm learning, this is more of an art than a science when it comes to properly pricing, but really getting the right investors who understand the long-term value of rocket companies was our primary focus.
Jay, I hear what you're saying, but $3 billion would have put you on a multiple that would have been tech-like. What you've raised puts you on a multiple that is more financial-like. The market is basically saying, we're going to put you in that bucket and not that bucket. I don't think, actually, this is going to have a meaningful impact on the way your customers perceive you and the way your business operates, but it is an indication from Wall Street as to how the business is perceived and how current risk is viewed as well.
Yeah, I think it's an opportunity. We've sold down, I think, roughly 5% of the organization, so we've got a long runway ahead of us, and we're having record profits, a variety of drivers to continue to grow our business. And it's our opportunity, our 20,000 team members' opportunity to demonstrate not only to Wall Street, but our main focus is Main Street, that we can provide the best client experience on a tech platform, and we're pretty confident that over time the numbers will bear that out.
Jay, the mortgage market through this crisis had its own rough time of it. We do have forbearance rolling off. We do have these unemployment benefits rolling off. What is your expectation of industry-wide delinquency rates as we move forward through this tougher economic time period?
Yeah, as we look at our forbearance rates, which are about half that of the industry, we're very pleased with how we've handled our clients. I mean, the number one thing, we're servicing nearly 2 million mortgages, is taking care of your clients. So making our team members accessible, answering phone calls quickly, providing technology that allows people to explore the forbearance process, and now maybe the loan modification process, is absolutely critical. And so as we projected out early on in April and May what forbearance may look like, and then watching the results we're experiencing, we're pretty optimistic that although certainly this is affecting some Americans across the country, the vast majority are making their payments. And as we look at home demand, as you probably know, there's less than 4 months of inventory out there. The demand for purchasing a new home, getting approved, is nearing record levels. So I think that bodes well for the economy in general.
So what are you seeing in terms of rates? We have seen mortgage rates to a record 2.8%, 2.9% here. Is that the bottom? And how long can you live off this refinancing boom?
Yeah, well, we're very fortunate. We're doing billions of dollars a month in purchase as well. Our technology and our platform, our client experience is all designed around helping the client, regardless of whether they need to refinance a home or purchase a home. Clearly, as COVID hit, fewer homes were on the market and more people were interested in refinancing. As you mentioned, rates low, in the low threes, high twos. So it was the right time for millions of Americans to do that. So we're helping them, but our platform is designed, our marketing platform is designed to grow in any market. In fact, as we set our strategy for the future, we really focus on a more normalized market, call it $2 trillion a year of mortgages, and have a methodical way to continue to grow regardless of whether it's purchase or refinance. But as you said, right now, almost $11 trillion of mortgages here in this country in the money. Capacity in the industry is under $2.5 trillion. So we've got years of mortgages to work through from a refinance perspective, and we're excited to help clients there as well.
Jay, what about how issuance is changing in the COVID times? Are you seeing anything from your customers, from the data that shows that people are moving to the suburbs or buying more homes as a result of this crisis?
Yeah, so it's a great question. Rocket Mortgage and that app is designed really for first-time home buyers. Nearly 70% of the people that visit that app are purchase buyers. And so we've seen exactly that. We've seen more interest. We're talking to more folks. Our market research really demonstrates there are two things happening. first, people who have not owned homes are really thinking about owning homes, especially on the coasts. The other thing that we've seen is that people who are already homeowners are recognizing moving forward, they're probably going to spend more time in their home. Working from home has become more popular. We've heard of large brands saying they're not going to be bringing team members back for a year now, and so people are investing in larger homes, home improvement, all boding well for home ownership here in the country.
Jay, what about the issue we've had over the last couple of years? We've had black home ownership at historic lows pretty recently. Is there a role that the rocket companies can play here, and do you see that changing?
Yeah, absolutely. As you know, we're headquartered in Detroit, Michigan. We're the largest employer in the city of Detroit. Proud to employ thousands of African-American team members. And I'll tell you, our focus, FHA, VA, these are the programs that really assist a broad group of homeowners across the country. That's why, for us, being the largest FHA lender in the country is important. We got to continue to do that. I also think there's a great opportunity to continue home ownership education. And when you think about Rocket Mortgage, completely online, it doesn't matter where you are at in this country. You have access, full transparency. You can figure out what you qualify for. You can learn about your credit score. We have systems to help people improve their credit score. So all of those things are focused on helping all homeowners, but in particular black homeowners, because we recognize that's a major focus we all need to have to get better at it.
Jay, you make a compelling case to the business. I guess that's your job, and I'm really fascinated at how the whole process has gone down of getting the company back to market. Can you just give me a bit of color as to the kind of conversations you were having with investors as you went through this process? As we indicated at the beginning, we started off with a valuation of, let's say, circa $3 billion. We've ended up with less than that. Can you just give me some color on kind of how that process evolved and the kind of conversations that you had?
It's an interesting process. As you mentioned, probably unlike a lot of IPOs, our business has been here for 35 years. We have a track record of great profitability over a long period of time. Just a few short years ago, I think we had 5% market share. We're now approaching 9% market share. And so the response we had from investors was overwhelmingly positive. And I think, as you touched on, with COVID and some of the challenges or uncertainties in the market, people are being thoughtful, and we're being thoughtful. Right now, we're having record profits, so less concerned about the amount of capital we can raise, more concerned about the investor base we're bringing on, who really this long-term investment resonates with, right? For our business, and you've seen that over the last decade, going from 1% market share to nearly 10%, and where we're headed, this is a long-term strategy. Rates are going to go up, rates are going to go down, but as long as we continue to keep investing in our business, in the long haul, we'll continue to have that record profit, see that market share growth, and that's the discussion we were having with investors, so they could see that this is one of those type of investments they're going to be in for 3 years, 5 years, 7 years. And so I think we really, through this process, although a lot of road shows, a lot of conversations, we found the right investors that support our business.